Most stocks benefited from a view that they were due for a bounce because sentiment has grown too negative and uh, too too negative. Oh my gosh, I can't think of anything else. It's just been so negative in the market right now. Sentiment is just too bad. It's like evil. It's so negative, right? And because many of these stocks have suffered material declines, big declines, especially in the tech sector, that left them oversold, right? And a feeling that these stocks were oversold and needed to be bought. And that's what fueled today's rally. The recognition that stocks rallied in front of the FOMC decision, and in spite of a 10% year over year increase in February PPI, that stoked speculation in the market that these stocks were poised to extend their rebound, not just today, but also tomorrow. Tomorrow, there will be a rebound as well, a continued rebound, and a strong one at that, even after the FOMC meeting. And this is going to be an FOMC meeting in a sell the rumor and buy the fact manner. That's what it's going to be. That notion presumably fueled a little fear of missing out of future gains. And that's why, towards the end of the day, stocks continued rising. People thought, oh my gosh, this is it. This is the rally. This is the turnaround. Here we go, baby. Let's get in on this. That's what people were feeling throughout the day as the rally continued. And further gains could exacerbate an even bigger gain, right? So that's what today's advance was all about. People saw the market was oversold and they wanted to jump in. And then as more people jumped in, more people jumped in. And then as more people jumped in, for more people jumping in, more people jumped in. And it was just great. It's always good to have a feeling like this, to remind us of why we are investors, to remind us of why we are putting our money to work for us, to remind us that our goal is financial freedom. But, one but, we still have the wild card of Russia, China, what's happening there, the war, and then a new kickoff of COVID. I don't know. The airlines, they seem to tell a different story, but they do still warn about China and this potential threat of COVID reemerging. Maybe it can just stay in one area of the world and let the rest of us really do get back to what we love to do. All right, this downward trend here in the market, I should have pointed this out yesterday, but for some reason it totally slipped my mind. That's the death cross that occurred on the S&P 500. So I'm going to go into a little more detail on that in just a moment as well. So welcome back, investors. I am so glad you're here with me. I'm Adam. This is the After Hours show where the most important thing is what's on your mind. So if you do have a question, leave the ticker symbol and your question in the comments, and we'll go over it live during the show. So do that. Don't be bashful. I'm here to help answer your questions to the best of my ability. So thank you for joining me. Okay, stocks did close higher today after an extended decline in oil prices. That was also a key to today's rally. And lower than expected producer inflation, which eased some concerns over mounting inflationary pressures on the economy. The PPI data. Yeah, it was a scary 10% number, but there was actually some good numbers within the report. If you look past the headline, right? If you look past the big 10%, oh my gosh, double-digit inflation, we know food is going higher. We know gas and oil is going higher. We know this. But if you dig a little deeper, right, and you get down to the core of the CPI data, you strip away the food, you strip away the fuel, the energy, that was much better than we could have expected. Maybe on the core of the PPI data, maybe it's showing a glimmer of hope that inflation may be flattening at the very best, right? Maybe at the very worst. I guess you could see it either way, right? Either the glass is half empty or the glass is half full. Which is it? Optimism, pessimism. Well, investors are realists, right? We're realists. That's how we go into the market. So today, the Dow lost. I'm sorry, the Dow. I'm so used to saying lost. The Dow gained 600 points. The S&P 500, it was up 2.14%. In the Nasdaq, it gained 2.9%. The Russell 2000 even was up 1.4%. Still, the impact of the surge in commodity prices was yet to be captured in the producer price data, right? While lockdowns from rising COVID infections in China continue to threaten supply chains. So we're not out of the woods yet. Attention now turns to the Fed's policy decision tomorrow, where it is expected to deliver a quarter point rate hike, which would be the first increase in the federal funds rate since 2018. Seems like a lifetime ago, doesn't it? All right. Investors also await updated expectations on inflation, growth, and guidance on the impact of the war in Ukraine and what that may have on the economy. All of that from the Fed, which we'll get tomorrow afternoon. Around 2:30 p.m. is when the press conference begins. Now, stocks that have been hit the hardest this year saw the biggest gains today, particularly the large growth stocks within the S&P 500, information technology sector. That was up the biggest, 3.4%. Consumer discretionaries were also up 3.4%. The energy sector, that was down 3.7%. And it was the only sector to close lower today. Airline stocks rallied around higher Q1 revenue guidance from Delta, United, and Southwest Airlines. And more on Delta and the group of airlines in just a moment. Here's where we stand year to date. The Dow Jones is still the leader, down 7.7% year to date. That's better than the eights. The S&P 500 is down 10.6. The Russell 2000 down 12.3, and the Nasdaq is out of the bear market, down 17.2% year to date. So things are looking much better today than they have been in a while. Okay, Bitcoin, BTC, USD, and I'll talk about that death cross here in just a moment. On the S&P 500, and one also occurred a little bit ago on the Nasdaq. Now, if we look at Bitcoin here, it is still in. Let's open it up a little bit here. It's still in an ascending trend line. I'm trying to look to see if there's a channel starting to emerge, but I don't see a channel just yet. The top of these three tops here that were made, they're not exactly ascending. For example, there's divergence on this chart here. If we go from this high on February the 10th and we run it across to this high on March the 2nd, this line is descending. So we've got divergence here in two places for Bitcoin, which is interesting. We have divergence within the candles and price action itself. Bitcoin is making higher lows, which is a good sign, but it's making lower highs, but we don't have much data. We basically have two candles. So it is making lower highs. We could adjust this candle and take it off the wicks and bring it down, and it kind of levels out a little bit more. Um, and it's not so much trending down as much as it's trending sideways. So we have to watch that. Also, down here with the RSI and the MFI, the RSI is ticking up, right? From March the 13th to today, it's been ticking up. But the money flow, actually going back to March the 10th, it's been slowly declining. So we've got rising relative strength, but we've got a lowering of money flow. So it means there's less money going into Bitcoin. And that would make sense because then you end up with smaller moves like you see here on March the 12th, where it was basically flat the whole day. That's what you get when money is flowing out. You get the bigger candles when money is flowing in on the chart. Okay, so Bitcoin is still looking good. It's still in an uptrend, and it has reversed. Could Bitcoin have been a precursor, a type of leading indicator that the technology sector will also turn around, rebound, and slowly march back up to its highs? If that turns out to be true, it's just a theory right now. If that turns out to be true, that will be rather interesting for Bitcoin. All right, Ethereum, ETH, Oh, real quick, I want to point this out. Back here on January the 14th, Bitcoin had its own death cross. After that occurred on January 14th, Bitcoin hit its bottom on January the 22nd. Okay. So from the 14th to the 22nd or 22nd, so about a week, a little bit longer. So about a week. And Bitcoin hit its bottom and reversed its trend and starting moving up. Okay. So death cross occurred. About a week later, Bitcoin hit its bottom and then it began rallying in an uptrend. Remember that for when we get to the S&P 500. Death cross, low hit a week later, then rally resumed. Okay, we can remember that. All right, Ethereum, ETHUSD on TradingView, and there is a link in the description for a free account to TradingView. Ethereum here, it is doing a similar march that Bitcoin is. It is making higher lows on the chart here. It also has the divergence between the relative strength and the money flow. And it's got a big divergence for its higher lows, but it's also clearly making lower highs, falling into this wedge pattern here, right? So we can see that on Ethereum, it is way clearer. It is totally clear that it is making lower highs while it's making higher lows. Okay, so a divergence there creating a wedge that could ignite a pretty big rally for Ethereum. Okay, I want to show you real quick. I want to show you real quick on the NASDAQ. I want to look here for just a quick moment. And the death cross that occurred on the NASDAQ. Back here on, what would this be? March the 1st. The NASDAQ had its own death cross. It's in this red circle filled in with yellow. It had a death cross. Now, we could say that going to March 14th, yesterday, maybe, which is, about a week later, maybe that was the bottom, which would track with Bitcoin. And then maybe now we see this rally. And then, we have our zigzagging pattern, but maybe we start moving higher. That is a possibility because that's exactly what Bitcoin did. That's what Ethereum did too. I didn't point that out. So watch that for the NASDAQ. The NASDAQ may have put in a bottom yesterday. So we'll keep watching that. Let's go to the S&P. SPX is the ticker I use in TradingView. Let's talk about this death cross that occurred yesterday and what's going on here with it. Now, let me readjust the chart. There we go. Okay. Volume candles are getting in the way here. Volume has been increasing. I don't know if you've realized that, but as the market has been going down on the S&P 500, the volume has increased, right? Whenever we get to really big lows on the S&P 500, volume spikes, and it's been doing that. But let's talk about this death cross, and that's this red circle right here, filled in with yellow. The death cross occurred yesterday on the chart. I should have talked about this yesterday, but it just totally slipped my mind. Now, remember, on Bitcoin, we had a death cross. About 1 week later, we had the bottom. The bottom occurred. And then it changed its trend and started uptrending. Now, I've always said, you can go back and watch videos that I've put out talking about this death cross. I think I did one over a year ago now. I definitely have a short out there, which is a YouTube video that's 60 seconds or less that explains the death cross right quick for Bitcoin. And a death cross to me is a lagging indicator, which means we've already been in a downtrend. Because for the death cross to happen, it's a shorter trend line crossing below a longer term trend line. So the infamous death cross signal. It's a technical phrase referring to when the 50-day moving average closes or crosses below the 200-day moving average. It is significant because these are the two most popular moving averages representing short-term and long-term price trends. So all traders on their charts have these two lines. So when a short-term trend slumps below a long-term trend, it basically confirms that the market's in a downtrend, that it's already in place, it's already happening. And therein lies the key to this particular pattern. Where is price itself in relation to when the cross occurs? That's the question we need to ask ourselves. And for the S&P 500, for the NASDAQ, when it had its death cross about a week ago, price has been falling. all year. We're nearly 3 months into a decline. So it's a lagging indicator. Now, if prices already extended to the downside after multiple distribution days when the quote death cross happens, there's a good chance it will be followed by a snapback rally in price towards, now this is key, towards where? Where would this rally go? Will it go all the way up and test new all-time highs? No. The death cross means I need to put a line here now. I think we might be back now. Uh, uh-oh. Okay. I think we're back. I hope we're back. Um, I'm not sure what happened there. Okay. Anyways, going back to the death cross here. I hope we're still live. I don't know if we're still live or not. Oh, I'll just keep going like we're live. If not, I can retouch on this tomorrow during its live stream. I'm not sure what happened there. If we lost uh internet or not, I don't know. Okay. Anyways, uh, oh, I guess we lost internet. Well, if we're live, we're live. If not, I'll wrap this up pretty quick then. In case we are still live, I'm not sure what happened to the feed. Let's just continue with this. Where the death cross occurs, that's important because that's our target now. When the death cross occurs, we're going to get a rally that is going to go up to this line. And that line is exactly where the death cross occurred. And we should get there. Maybe it takes a few days to get there, but more likely, maybe it takes a week to get there or a couple weeks. But this snapback rally, it seems to have a much higher probability of occurring, especially if, pundits are out there and they are being very negative and bullish in the market, right? That's when you get the most powerful snapback. All right, well, I'll go ahead and wrap the live stream up here because I'm not sure if the live stream is even up or not. We looks like we had some kind of technical difficulty, so we do have some videos coming out independently, not live, but pre-recorded. Catch the Tesla one that came out earlier this afternoon, and then Affirm is coming out at in about 25 minutes at about 6:30, I believe it is, or 6:15. So that'll be going out for a firm. And then we got some others that are lined up to come out. One on CrowdStrike. I think CrowdStrike is the number one cybersecurity stock out there for you. So watch out for those. Sorry about the technical difficulties we had today. I'm not sure what the problem was, if it was on our end or if it was on the software provider that we use for live streaming, but I'll get it sorted out and figured out. So thank you for joining me today. Sorry I had to cut it short with this. I don't even know if I don't even know if I'm still live or not. But yeah, thank you guys, and I do apologize again. So I'll see you guys in the next video. Take care.